market. But let's get a check now on what's played out so far and what to expect in the month of October. Join us for this conversation now. We have Mr. Olatunde Amolegbe as the MD CEO, Arthur Stevens Asset Management. Good morning, sir. Great to have you on the show.
Good morning, laddie.
Yeah, fantastic. I see I'm sure you were trying to make a trade on your phone right there, but that's okay. That's fine.
Thank you so much.
Yeah, first of all, congratulations on your latest appointment. I don't know if you want to quickly tell us about it.
Thank you very much. Well, I mean, the Investment and Securities Tribunal is the capital markets court, is the court where capital market disputes are resolved. Obviously, the SEC is the apex regulators in the capital market, but there sometimes there are issues that needs to be escalated beyond the SEC, and typically those matters that require to be taken to court typically heads for the Investment and Securities Tribunal, rather than the Federal High Court, as the case may be. So that's all I want to add regarding that for now.
Yeah, congratulations on that appointment. But let's get a check on what's played out with Nigeria's equities market in this month of September. We're up over 1% so far, just when the last few trading days, of this month. But, for you, aside from the, headline gains we're seeing right now, in your opinion, did we see an outperformance in September?
Yeah, I think it's been a good month, relatively. But if you compare it to previous months, you will it's safe to say that, we've seen what I would refer to as some sort of a slowdown. All right. Previous months we've seen gains in excess of 5%. Some months we've seen gains in excess of 6%. So slightly over 2% for September so far. It's not been too bad. But generally, if you look at the trajectory of things, September typically is normally what you refer to as a slow month, because that's the month where more consumption tends to happen rather than savings. That's the month where you have to pay children's school fee, and other pertinent consumptions tend to happen. So people, I will argue that investors don't tend to save that much in the month of September. So having said that, for us to still have a positive close shows that the momentum in the market is still strong.
Looking at the month so far, this is the first rate cut we've had in 5 years, and it did come in this month. Do you think we're going to see the impact of this maybe October? Some have tagged October a month of October, when it comes to security. Do you think that would lead to such a sentiment in the market?
I think we are going to see a lag. We might not necessarily see the full impact in the month of October. I actually personally feel that some of this, because this rate cut is sort of expected, the market has sort of been expecting it for some months now. I actually feel that some part of it has already been factored into the prices. So we might not see a jump as a result of the rate cuts in the month of October. However, over the next say 3 months, maybe by the time we start seeing, say, the fourth quarter results in December or thereabout, or January, then of course you could expect that these rate cuts could start having an impact, because obviously when you see the MPR cut by 5%, by 5 basis points, what you're going to also see is interest rate starts to come down, and that hopefully starts having an impact on the finance cost of some of the companies that are operating within the system, and that should positive impact on their profitability. That could see us seeing prices start to rise. But for now, I personally feel that this particular rate cut is being factored into prices. So I won't be surprised if we do not see a significant jump in stock market prices, on the back of this particular rate cut.
Right, and definitely we know the rate hikes kind of favor financial services, the banks, but now that we're seeing easing, when it comes to cuts, do you think investors should think twice, about the banking stocks at this point?
Obviously the banking sector tends to benefit from an elevated interest rate environment. There's no doubt about that. Typically, what happens is that we have an inverse relationship with what is supposed to be good for the banking sector is not necessarily always good for the real sector, because an elevated interest rate environment is positive for banks, but it is not necessarily positive for other real sector companies. So we see interest rate will come down, but don't forget that interest margin, while it is a significant contributor to overall profitability for banks, is not the only contributor to their profitability. So there's still opportunity for growth in other areas. Fixed income revenues from other services they're offering. So I think that this little cut might not undermine the profitability of banks for now, all right? But obviously they will need to come up with other strategies to try and plug the hole that will result from the fact that the interest rate environment will now start to come down, and that might not necessarily be positive for them.
All right, we'll keep tracking to see how it all plays out. September is technically over now. We're going into the month. That's a trading month of October. Thank you so much for coming on the show. That was Mr. Olatunde Amolegbe, MD CEO Arthur Stevens Asset Management, and he was recently sworn in as a member of the Investment and Securities Tribunal. Thank you so much for coming on the show, sir.
Thanks for having me, Ladi.